Eric Muathe from Muathe.com. Let's take a look at your holding, GTL Infrastructure. And here we're going to begin with the monthly. So on the monthly, we see that, yes, there was a breakout last month above the previous monthly closing high at 4.90. So the breakout continues to be intact, which is great. And we can see that as far as the MACDs and the RSI, we are looking at a stock that is doing exactly what you want a stock to do, which is breakout to 3-year highs, and also one of the MACDs, if not both of the MACDs, are at 3-year highs. Here for sure 3-year highs, here close enough, I'll give it a pass. And we also have a crossover above zero. That's just indication of momentum. So as you can see, meets the minimum requirement. Probably that's where I end my praise of the stock right here, because one thing you're going to notice is we are getting a breakout. And by the way, as far as my charts are concerned, RSI is trading at about 66.2, or let's call it 0.3, thereabouts. I think you mentioned yours was showing RSI above 68, but let's not worry about the minutia of the exact RSI level. The one thing I would like us to eventually come back to here in this presentation is this line here. Yes, it is breaking out, but as I mentioned earlier, we are coming towards the end of the month, today being March 29th, right? So we got 2 more days before we start the new month of April. Now this could change things, because if and when this chart turns negative, so once this is down for the month, it might confirm resistance rather than a breakout. So this could actually end up being resistance rather than a breakout, and that could be a problem. So the issue here is your purchase level, where you bought it. I'm assuming you bought it somewhere in this range. I'm not sure, but you gotta watch that stop, because if this thing turns down for the month and starts confirming potential for resistance, chances are this becomes an important high. Now I'm going to come back to this monthly chart in a second. Also on the daily, a little bit of an issue here, because you can see this was the daily closing, the weekly closing high, and that was at 6.40. So as of right now, there was an attempt to break out 3 weeks ago, but this attempt failed. Now, one thing we know about stocks is failed breakouts can be notorious for taking stocks lower. So that's something there that I would say is a little bit of an issue. We have a failed breakout, and also we can start seeing signs of negative divergence. Here we had an attempt to close at fresh weekly highs, but you can see that what we ended up over the last 2-3 weeks was negative divergence. I believe that negative divergence is not what you want to see when you're holding on to a stock. Now, I'm not saying go ahead and sell it outright, but it's just something to consider. There's also another view, and the best way I can show this is to go back and figure out where we broke down. Here, this break in early 2016. Remember, this is a weekly chart. We break down here, we come off the highs here, let's call it in the $3.50 area, 340 or 330, somewhere here. Eventually we drift lower. So we know that this was an important break for the stock. What we're going to do is we're going to draw a line from there, which is our uniformity line, to see what we get. And I'm just going to draw it like that. You can see resistance here for another high. And of course, this was a significant pullback, because you're talking about 290, 280 price range to the lows here of just above $2. That's a huge drop. And then we see the exact opposite when the stock moves above this level here for an entry, and subsequently it drops back below that level here, which is this movement lower. And what I'm getting at is we seem to be, as of right now, coiling back below that red line. That presents a challenge for the stock. If we go to the daily chart, again we see an issue here. This was the daily closing high right here, and that was at 6.70. We saw an attempt to break out that failed. So here we see this failed breakout. It's not a good sign. Now, one thing we can still have a good reason of holding on to the stock is the fact that we haven't really broken down on the daily. This would be the line to watch. I would say a break of this line could be confirming that the stock has truly run out of momentum. So I would watch this daily line, which connects the recent lows, for support or bounce. A break of this line is pretty much suggesting the possibility of a move much lower. Now, I want to go back to that monthly chart, take a look at all data monthly. And as I pointed out here, if this was to turn down and confirm resistance on this line, just draw it right there. If this is confirmed as resistance, you can see it coincides with the other major reversal area here. This is the top, which is this level here. So what I'm trying to suggest here is, if and when we observe that this red line is confirming resistance here month to month, that's a sign to get out of the stock. There's also another line which to me is one to watch, and it is the line connecting the prior lows in 09 and 2010. I'm just going to extend that line like that. Now you see it gives us a sell level when the stock broke down here off the highs there at the beginning of 2011. We've hit that level once before, which is here, and a pullback took place, and now we are here. That's why I'm saying you can hold on to the idea or to the stock, but with the idea that if it turns down for the month, confirming resistance here on these two lines, chances are the next major direction is down. And more so if this confirms or is confirmed by the Nifty. So let's take a look at the Nifty, and I mentioned this in an earlier email. And so we can see that the Nifty also, and I've been talking about this for many weeks, is coming back to test this. Remember, we are at the end of the month here with 2 more days to go. If this is confirmed as resistance, that becomes a problem for the Nifty. Otherwise, if the market is to truly advance beyond current levels, we need to stay above that red line. The same thing can also be said about the Bank Nifty. In fact, I think the Bank Nifty shows it clear that this is a level to watch here. So resistance on this red line would be a problem, especially now that we are slightly above it, which is great. If we start the month and at some point during the month we confirm resistance on this line, I would say that's a serious potential for a major reversal lower right there. And as you know, if you go back and check the most recent bearish markets, as far as the Bank Nifty is concerned, a break below that red line for the highs of 2007 going into the bear market of 2008. We break below here for the highs there. We tag that level for the highs here. And recently we broke below here for these highs. So what I'm saying here is we need to watch this as we begin the new month, because confirmation of resistance and a movement lower would really be visually, and also just based on the history here, the chances are this would be a major sell signal. And go back to GTL, and we can see that if the monthly chart also turns down, this would be a major reversal level. Eric Muathe, Muathe.com. Let's keep the conversation going. As always, good luck, peace, and blessings. Pam 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 sim pam 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 sim pam 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 pa tam pum karang kang kung kang kang karang kang karang kang 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 kang.